All right, we are live. Greetings, fellow traders. Let me get this tweet out to everybody so everybody can join in. 1 second. Awesome, awesome, awesome. Good, good, good. All right. So today, wow, I mean, I thought it would be pretty appropriate this week to talk about bearish continuation patterns. We are definitely seeing some bearish action over the last couple weeks, right? So hope everybody's doing well. Hope everybody's healthy. I know there's a lot of worry out there about the coronavirus, and of course, the market is a barometer of this, kind of, general worry and all that stuff and concern, right? Because the market doesn't like the unknown, right? So we keep on getting a lot of unknowns here, and so we're continuing to see some downside movement. So today we're going to talk about this week. We're going to talk about bearish continuation patterns, kind of see how we can look at setups on those. And this week we're going to be talking about, or today we're going to be talking about the two black gapping pattern. So before we talk about that, everything we're going to talk about, of course, as always, is for educational purposes only and not investment advice. So please take a moment to review this disclaimer. Awesome, awesome, awesome. All right. Well, let's get started here. So again, let's see where we left off with the market. So on here's the SPX, the S&P cash on Friday. Basically, this is the monthly chart. So what did we see? So back in February, right, we had a big nasty red candle off of a shooting star pattern, which brought us to the mid Bollinger Band here on the monthly chart. So far, we have basically a Harami cross right now, but the month of March isn't over yet. In fact, it's just beginning, and so we are likely going to be gapping down tomorrow. We'll take a look at the S&P futures in a little bit, and we'll see what will happen here. If we actually get down here in the 2800s, that's really going to make this a nasty red candle here, and we'll definitely put the it'll definitely put the that monthly 50 MA in sight. We know how important that one is if the bear market actually wants to start. From there, so we have the weekly chart, right? So last week we did finish with a Harami cross right here, inside week, right? So the Harami right here is inside this, or the real body is contained within the real body of this one, right? And we're below the 30 weekly moving average. Now, one of the things we pointed out in the newsletter this weekend is the magnitude of this candle versus this candle right here back in the week of October 8th here. And so it was also followed by an inside week. It wasn't quite a Harami cross, but it was an inside week, doji-ish type look that closed under the 30 weekly moving average, and we did that here too. So you look at this and you're like, okay, wow, if this is this size and this is this size, how much farther can we go down? Well, if it magnifies this distance down here, and we kind of showed this recently. That, let me activate that there. We have, that's one move down, right? But if this is 3 times the size of this candle right here, it's possible we could see 3 times the distance down. So just based on similarities. So we'll see. Obviously, we don't know exactly what it's going to do, but right now it is very important where we're at right now within the context, right? The change of composure that we've seen since the move down from the all-time highs, and so we're continuing to monitor that one, of course. From there, let's see. Let's take a look and see where we left off on the daily chart on Friday. So Friday, it looks, they tried to put a bullish move into the close, right? We had a big move down. We held the October lows early that week, right? Early last week, and then worked our way up pretty nicely, got over the 200-day moving average, got all the way up to that macro trend line right there. That's all the way from back in December, right? Of that 2018 December, then the Christmas Rose. We've been following this macro trend line up, and we have now gone below that. So one of the things we talked about last week on the live streams here and in the group that we retested that, right? So that was one of the things we looked at as a possibility that it was just going to be a retest. As bullish as this candle was, right? We basically retested, tried it again inside day, and then worked its way back down. So we finish here with a hammer. One of the things we've been seeing is a lot of times we see some bullish action followed by the bearish action, right? So we're starting to see that pretty often right here. Here's the price action on Friday. You can see here where they bought it up at the close. Right, gave a big push. Now, one of the concerning things was they pushed it back down. Right, we had a big upper shadow at the end of the day. Right, so it didn't really close at the highs right there. So that is kind of a concern. It was bullish action. It was crazy too. If you guys caught that, that was an incredible move. Option expiration, very impressive stuff right there. But now we're basically okay. Probably going to be gapping down significantly tomorrow. So we'll take a look at the futures in just a second. Let's just kind of show you the levels here. These are the levels that we provide to our members before each market open. And so you can see here on March 6th, these were the levels. You can see how significant they were, right? How these levels get tested and you get confirmation at these levels, right? A lot of times you see like nice reversals off them, good reversals off of here on these volumetric levels to the downside, right? Nice candles work their way up, right? So these levels definitely are very significant and still play a part each day. So good stuff there. Let's take a look at the S&P futures and see how they're doing. Let's go back to the 15-minute chart here and see what they're doing right now. So right now we are down 135 points. So we've been getting some questions and stuff like that about the limit down and all that stuff. So the limit down rule is basically with futures, right, after market hours, that you basically can move down 5% of the S&P, and right now we're at 4.61% based on the S&P futures here, and so 5% gets a halt on the S&P futures, and then they can halt it until it's basically halted until the market right before the market open, and then they can gap it down another 2%. So we could gap down as much as 7% the next day, and then if we go into the open market, and not saying it's impossible, but I'm not saying it's going to happen, but it is possible. There's two levels they can halt the market, right? So they can halt the market if during the open action, if we move another 7% down intraday, they can halt the market for 15 minutes. Okay, so you get a 15-minute halt. And then if it pushes down even farther after that, which more than likely it will, right? Nobody wants to go bullish after a halt. Then it's 13%, and then they halt it again. That's a level 2 halt. And they would halt that for another 15 minutes. And then if we're down 20% intraday, they close the market for the day. And so 20% is your max limit on the day for a downside move. They just do that to prevent a flash crash like they had on Black Monday in 1987. And so that is the reason for that. So I'm sure those rules are eventually going to change again, maybe if we hit it. So they might even adjust it where it's like you can only go down 5% intraday or even 3% or whatever the case is. But who knows? I mean, that's just speculating at this point. So, but right now, I mean, we're pretty low right here, right? So we're already back at, if we go to the daily chart on the S&P futures, right, we're already really, really close to the October lows, right? So those, I'm sorry, we're below the October lows right now. Here are the October lows there, right? Because we bounced off of that the other day. And we're below that right now. So the next is actually the August lows of 2019. So we'll see if those get hit. That's the next level down. It's about 27.75, right? And there's another one right here at 27.80. We're really, really close to the lows. I'm sorry, 28.10. So that's the next level down. And then of course below that, we'll deal with that if that comes. So you got the December lows and all that. So, but anyway, very, very interesting stuff right here. So that's what we're seeing on the S&P futures right now. Okay, so good. So tonight, this week, we're going to talk about really, basic stuff. We've been talking about some complicated things, changes of composure, different setups, things like that. This week we're going to talk about candles and just looking at some bearish continuation patterns. This all comes from Bulkowski's, thepatternSite.com, and what he's done. What I really like about what he did is he gave really good analyses of candlestick patterns, and he debunked some ones that were like supposedly bullish patterns that ended up being bearish patterns, and these are pretty much like the top 5 that we're going to be talking about this week. And so I thought this one occurs a little bit more often, right? So this is called the 2 black gapping pattern. So this is a candlestick pattern, and basically all it is if you go, let's just go SPX right now. In fact, we'll go SPX and we'll take a look at SPY. But if you go SPX, basically all it is you gap down one day. Okay, so say you have a green day here, and then you gap down here and you have a red day, and then your next day is red too. Okay, pretty simple stuff, right? So you gap down with a red day, and it's simple, but it's rare. Okay, so like here, just for instance, you gap down, you had a red day, but did you have a red day afterward? No. So you don't really get a lot of gap downs like that and then have a falling red day. But if you do, right, then there is a 68% chance that you get follow through to the downside. Okay, and so this is very clear right here. You can see on the SPX that we gapped down this day. So we had a red candle right here, and then we had follow through the down. We had a red candle this day. So 68% chance you get follow through the downside, and we certainly did. Right, that was the low here was 31.23 and got to move all the way down to 2800. So obviously that was a significant downside move. Very rare, but in this market, right, based on the news, right, that's almost a good consideration right here. So if you look at the SPY, let's take a look at the SPY and just just to entice everybody here with how that looked, because the SPY is, relative, a little bit more tradable than the SPX. You had a red gap down right here, and you had the second red candle right here, right? So even if you got short this day, right, and just went like a week out, right? So those were the 25th of February, right? So the 25th. So if you just went that just got the weeklies instead of going 2 days out, just got the 28th. We could look and see what happened with those puts on that day, right? So that was here. So let's go to the 28th. Obviously, these are going to be a little bit expensive, because of the implied volatility, which we talked about last week. And let's look at the puts and just say here we got puts at the end of the day, like let's say 310 puts, just something a little bit out of the money, but not too bad, right? And you see here, this was the 25th. So let's take a look and see what those puts did. And you can see right here they were pretty significant, right? So here it was the 25th, right? You get in here at about $3.10, $3.12, close to the end of the day. And then the next day you have to be aware of this, right? With the volatility, right? This is gonna be a big range, right? So the range of this candle was 2.5 points. So you're in at $3. You basically have to take it as a lotto, right? Because this kind of pushes you all the way down to 78 cents, right? But if you hold through it, right, look what that did. It went from $3, right? And then, basically 2 days later, you're at $14, and 3 days later, you're at $24 on those options. So pretty impressive stuff there on that pattern. And so this is a little bit more common. A couple of the other ones we're going to look at this week are not going to be as common, right? You can see this on a bunch of other stuff too. If we look at Shop, right? Shop was an interesting one that had thought it had a gap down there. Let's see. Let's take a look. I think it maybe did it back here. Yeah, not exactly the most common one. Let's take a look here. I think I looked at Shop, but I was looking at a different type of candle right here, so we had a different one there. But Tesla did it, I believe, recently. So Tesla here, we had this big move up right here, and then we gapped down with a red candle. Then we had a follow through red candle right here, and then we got nice follow through the downside. So this is the two black gapping pattern, and it's rare, right? So because we don't, in a bullish market, you don't see a lot of this stuff, but now, we may start to see it a little bit more. So even here, you can see it never happened, right? We gapped down on Tesla this day, right? But we had a green candle the next day, so that didn't work, right? So, and we would want to close below that candle. You can see right here. Where do we gap? Right here, we gapped down, but did we close below that? No, we didn't. We had a red candle, but it was still above that level, and then it kind of came down a little bit and worked its way back up. So anyway, good stuff. Keep an eye out for these ones. It's a two black gapping pattern, and it's a 68% probability for continuation to the downside. But you can see here, if you have context with it, if you have news, like Corona, things like that. Tesla sometimes has some interesting news, Cybertruck, all that stuff. This is a pattern that could potentially be tradable, but like you can see there with the IV as high as it is, you kind of have to treat it as a lotto. Okay, good stuff. Well, at this point, if anybody has any questions or chart requests, please feel free to plug those in the chat window, and we'll get through as many as we can. And we'll try to wrap up as early as possible because it's we're spring forward here in the U.S., so it's we basically we push the clocks forward a little bit here. So I'm sure everybody wants to get extra rest tonight so we can be well rested for another awesome trading day tomorrow. So good stuff. We got a few in here from Shirley, so let's take a look at these. So the first one here on her list was PSA. Now there's a lot of bullish action, right? And I'm sure a lot of these are going to change a little bit based on the gap down, right? So this had a strong move up, good volume right here. Of course, it did not. Now it is uptrending. Okay, so the one thing is it did not close above these key levels. We looked at this recently here. Public storage is an interesting one. It started to get interesting here after earnings, right? Some big volume, even before it. Some big volume started to come in. It's been on the radar a bit. Again, I would have wanted to see it close above this shadow right here, right, to at least get a move up to this side right here, but we didn't get that on Friday, right? We left an upper shadow basically there. So that's a good area of caution on that one. Let's take a look at Tesla. Okay, so Tesla is interesting here, right? So we gapped down a little bit. We had a lower shadow, right? Or sorry, we had a southern doji right here. We gapped down a little bit, just kind of a muted little move right here. But you can see we are below the 8 EMA here on the daily chart, the exponential moving average. This is your 8 EMA right here. So we're below that. So we'll see. This one sometimes goes inverse the market, but chances are, the market's pretty weak right here, so we'll see. And it's got the 50-day moving average right here at 644. Below that, you have an open gap right here at about 590. So just be careful with that one going into tomorrow. Amazon, this should always be an interesting one, right? This one does like to move with the two black gapping pattern right here, right? We gapped down, but it was green, right? So it didn't quite give the exact same setups as the SPX and the SPY. We gapped down on Friday, but pushed up a little bit, had some trouble getting over some prior resistance levels here. And so with an upper shadow, right? So it was tough, right? I mean, there was some decent candles on Friday, but not a lot of them really closed bullishly, right? So they left like some indecision right there. So not a lot of conviction on some of these moves, and not really at really major levels. So be careful with that one going into tomorrow. SRE. SRE is interesting, right? Again, we're below the 50, we're below the 200, and we're below the 80 MA. So be careful with this one on the long radar. It does have a downward trend line right here. We closed above it right here. This was a good close right here, but notice how the volume was decreasing, right? So this is your first breakout candle here. We did close above the 80 MA, but that volume was really, really low that day, which is interesting given the size of the candle. And notice how it didn't hold, right? Got back below the 200 and it's kind of down here. So we're retesting this trend line here. So it's a possibility it might get a bounce, but again, probably at the weakest in the market. Just have to have some caution on that one. And then STZ. Okay, the same stuff right here, guys. We're seeing this move down, right? We got our trend line right here. Is your downward trend line, right? We never really confirmed above any of this stuff, and so everything is bearish, guys. I mean, we're just looking at a major change in trend right here. So we'll have to just continue to stick with the trend, and if you don't like shorting, just stay bearish, until proven otherwise, and then once it proves otherwise, we can look for confirmation over our trend lines and look for entries, right, on the long side. So Adil, yeah, good, yeah, got some rest today, so that's always good. Got the newsletter out and all that stuff, so that's fun. Hope you're doing great too. Apple, yeah, let's take a look at Apple. Grab a little grapefruit right here. One sec. Hope the weather's getting better for everybody too. That kind of helps a little bit. All right, let's take a look. So Apple's been interesting, right? So it gapped down yesterday, but it couldn't quite fill the gap. And it's also below its 80 MA too, right? So you just have to be, all this stuff you just got to be careful with, right? I mean, unless you're over these things, it's just like, okay, right? So at this point, you can look for bearish setups right here. It did move up a little bit, right? And, we pushed down below the trend line here, but we haven't closed bearishly below it. So let's see how we close tomorrow. If we close below a couple of these levels with some good volume, right? Apple might be one for a potential short idea. Jay Schwartz, what's going on? Never played USO before, lowest levels in years. Time to go long or buy calls? Great question, and thanks for tuning in, man. Let's take a look. So USO is interesting, right? So I was having a discussion with a friend who likes to trade oil, and although these levels are low, this may not necessarily be the time to jump in, right? So let's look at the oil futures right now. I know they're down, like the Saudis are suppressing oil prices, right? You can see here we got a big move down here. 30 is a key level that held, but honestly, I mean, before really taking an entry, right, you still have to do all the basic stuff, right? We got to look at our trend lines and wait. Right, so I mean, some may try to hold here, and then but again, you need time, right? You need a lot of time to get into this, right? So I mean, it could chop around here for weeks, chop around here for months, right? So at this point, we'll just wait, and see, keep an eye, see if it forms a nice trend for us. We'll look for a consolidation pattern and look for a breakout on that, right? So I mean, it would be a speculative play right now, unless you just want to go for a quick scalp up or something like that. But still pretty speculative right here. We've been downtrending, the trend line is still down, right? So at the very least, I'd like to see a confirmation above the trend line, right? And we're probably gonna be gapping down even more. So we're gonna have this trend line right here. So let's wait. Let's at least confirm above that, right, with some good volume, and try to get up to the next level. So tricky stuff. Matthew, what's going on? Thanks for tuning in, man. Anil, yeah, Apple, we looked at that, and then let's take a look at Shop. Okay, so Shop is pretty interesting. Shop has been, over all of them, generally a little bit stronger, right? It's been showing a lot of relative strength. Like this day right here, it had a really, really nice candle off the cloud. It got some decent follow through to the upside. It was over the 80 MA. But look at the volume right here. Notice how it was going down. And look at it on the red day right here. Volume went up. And look where it was. It was below the 80 MA too, right? Now, it was holding the 50-day moving average, but still below that 80 MA, right? So we want to be over that, ideally, for a sweet long. Doesn't mean you can't, you're not going to get a reversal under it, but got to have some confirmation, right? So with some good candles. So right now, red spinning top right here, so probably gap down tomorrow. See if it has. One thing I have liked about it, I'm not sure whether they're going to gap it down tomorrow, obviously, but it's been holding this trend line pretty well from here, right? It bounced off of that the other day, so see if that holds again. So this cloud's going to be a pretty big area for it on the daily. Good stuff. Stacy, how's it going? Thanks for tuning in. Michael, yeah, what's up? Black Monday, 2 in the making. That's right. What's up? Let's take a look. So let's look at work. I think work. A couple of these had some good write-ups this weekend. I think by Barron's or something like that. But yeah, so work is interesting. Right, had a rough day yesterday, but on Friday, but it had a big lower shadow right here. So again, it's got some work to do to get above this one, right? No pun intended. But it is kind of in this congestion zone right here. If we gap down tomorrow, you got the scene of the breakout right here, right at like 23. So that might be a potential support level right there. We got earnings coming up on this thing too, which should be interesting. So that'll be good. Let's take a look. Zoom's been just crazy, right? So after earnings, had a big move up, came back down, lower shadow right here. This candle right here before earnings was so nasty, inside day up. So I mean, really, I mean, it's just kind of, I mean, it's kind of megaphoning its way up right here, right? It's just like, kind of keep an eye on these levels right here. Here's a good geometric level right here. See if that holds. But this has been a good Corona play. We've been seeing a lot of rallies at the open. It didn't quite do it on Friday, but on Thursday it gave that big move up. Friday had that 15 orb down and just kind of played with the rest of the market, right? So, and it's getting pretty high up here. I mean, it's kind of at its recent highs. So just keep an eye on it. It's been tricky. I'm hoping its options eventually get normal again. We've been seeing some really big spreads on it, which makes it a little bit more challenging to trade. So definitely something to keep an eye on there. Microsoft, good bounce on Friday off of the cloud bottom. I do like that, So, but if we start trend lining this thing, you got that going on right there. So I mean, it might take a while for these things to kind of work their way up. It's got the 200-day moving average right here at 146, about 145, right? So see if that holds as a potential support area, and then we'll kind of go from there. Huge congestion zone down here. So again, we'd be looking at possible congestion down there if it wanted to move back, right? So that's probably a big area where it could chop around for a while. So we've got that going on. XOM. Yeah, I mean, oil's just getting decimated, right? This has been popping up on our bearish radar intraday like all the time. Interesting plays intraday, right? Here's your moving average right here. It probably gap down with oil again tomorrow. So again, just keep an eye on these trend lines. Wait to see, if they're going to break out. Otherwise, look for short opportunities on it, right? So XOM is a pretty good one right there. We've been seeing some good setups intraday on Halliburton, good setups on Oxy. There's a couple ones that are pretty interesting in the oil sector intraday, which have some pretty good spreads. So good stuff there. ZEK, what's going on? BJ. I'd say this place, they were public a while ago, years ago, and then they went public again, and it's just sort of like it's interesting, store. I mean, they're just like the slummy warehouse club, but you can get some good deals there. You can get, and you don't. What I like about them is you don't have to be a member to get the discounts, but you just have to go to the customer service desk to get the deal. Otherwise, you got to play the retail at the register. Anyway, just a little tidbit right there, guys. But you can get some good deals. Anyway, so I like this right here. It started break. I like how it broke out here. Over the downward trend line, that's good, right? So you got that nice follow through after that one. Of course, it was after earnings. You're a little bit tricky right there. Upper shadow at the 200-day moving average in the cloud. Okay, so see if this thing can consolidate a little bit. I like the volume, right? Just watch the upper shadows. This is gonna be a key level for it to get above now. And if it closed bullishly above that, you got your gap above here, so that would be interesting too. But right now, it's kind of in that red cloud, so watch it might kind of follow that down. And then Humana. So yeah, so a lot of these got a big boost when Biden won. Was like kind of the consensus winner of Super Tuesday, right? So so because Bernie's all about making healthcare available for everybody. I mean, it's not such a bad concept, right? But anyway, but Humana got a big burst after that, and it held the 50-day moving average so far. So yeah, so we're seeing some strength in this sector right now. So keep an eye, obviously healthcare, any of the vaccine companies, these are a lot of go-to plays for this. But we'll see where they put it. They might gap it down. We have an old fib fan line right here that could hold, but it's kind of tricky. In intraday, a lot of these ones have some nasty spreads too. So just be careful with that. Cherry, what's going on? Hope you had a great weekend. Let's take a look. CRWD. CRWD. Yeah, so a bit of a doji down right here. We had an inside day down and then another doji back down again. We have this kind of breakout level right here. We had a closing gap, it looks like right here, which got filled. So we held that a little bit, so that would be good. Next was your congestion zone down here. So see where they gap this thing tomorrow. See if it holds this congestion. But if you get caught in here, right, it might get caught in the congestion zone again, and it might chop until earnings. So that's a tough one right there. But if it does, and you get a nice breakout candle and the market starts to get strong again, this one could try to work its way back up to these recent levels. So that'd be good. Simon, what's going on? GLD. Yeah, so these will be interesting right here. Guys, just keep an eye on GLD. It will probably gap up tomorrow. But a lot of times with these gold ones, we see a gap up and then flush. Right here we saw gap up, flush. Right, so we might see gap up and flush. So just be careful with that one. But sometimes they do give some nice moves intraday. Just be aware of that sometimes they like to short, push these things back down after the open. Let's take a look at the gold futures while we're at it and see where they're at right now. Wow, 1700, guys. I mean, just amazing stuff. Yeah, so they're kind of ticking higher right now. So I like what they're doing right here. I like how it's above these levels. Let's see if they can continue to work its way up. Amazing on gold right here. So very, very impressive. Hobbs, what's going on? Hello. Yeah, work at the 1 minute between 1 to 3 p.m. and Friday flatline while market was going down. Well, that's good. That's good for it. Right, let's take a look here. Let's take a look at work. And let's take a look at work here. Let's just go here to the 5 minute right here. You can see, yeah, look at that. This is what we like, guys. Like this type of pattern right here is just great. Right, this is called the low volume. Was the low volume sideways action, right? So I mean, really, really tight. You know, from compression leads to expansion. Great analysis on this one, man. Right, great find on this one. Really, really tight, and then boom, just exploded out of that really, really tight triangle right there. I love it. Great stuff. Yeah, Balaji, what's going on? MRNA. Yeah, let's take a look. Yeah, so here's a couple of the Corona vaccine, type plays right here. So they've been all over the place too. So, I mean, they're not really definitive, right? So you can see we had a nice, we did have a nice push up on Friday. I like how it closed over these levels, right? The problem is that you had this prior resistance right here and it was going right into resistance a little bit, right? So let's see. I mean, if it gets strong and, has some strength into Monday, let's make sure it can get above this 30.75, basically over 31, right? Over 31 with some volume, right? We may be able to test a little bit higher in that prior candle, that big red candle right there. And then Guild, yeah, Guild definitely had a great close on Friday. Really, really tricky with the options. We like this one a lot, but the IV was just too high. It's just too risky, right? So so one of the things with this one, just keep an eye on it. If they gap it down, you might be able to buy some strength on it tomorrow. So there we go. Reed, what's going on? QQQ, of course. Let's take a look. So the Qs. Again, here's your two black gapping right here, gap down black, close below it right here, black, right? You had one pause day right here, which is painful because this is a big range, right? But if you hold, right, you get that nice fall through the downside. Bounce off the 200-day moving average, right? And right now, just kind of floating in space right here. It's got a gap above, it's got the 200-day below. So my guess is they'll probably gap it down pretty low tomorrow. So just see how it holds 200. The 200 moving day average is just right at almost a 200 price. So that could be pretty interesting. So see how those levels hold going into tomorrow. JP Morgan. I tell you, the financials have been really weak, guys. As good the financials, so good the market. That's what they like to say. So, so here's your downward trend line right here. Again, it's been down to a little bit. Jamie Dimon, had a emergency heart surgery last week, and he's going to be out of commission for a little bit. So that kind of scared this stock a little bit. And again, with the market, the rest of the market too, it's kind of a key, key one to keep an eye on, right? This is an interesting one. It's tradable. So just kind of keep an eye to see if it holds these prior support levels. If not, it's got very good chance it's got some more downside action in store. So we got that going on. AM Vids, what's going on? Netflix. Yeah, so Netflix has been very, very interesting, right? The last couple of weeks it has shown some relative strength with the market. It's had some big moves intraday, right? But on the weekly chart right here, right, we just had to be careful, right? Here's your resistance. So we've been waiting for this weekly chart to break out above this level with some good volume. It just hasn't done it. So we got 3 weeks in a row, actually 4 weeks, upper shadow, upper shadow, upper shadow, upper shadow. It continues to reject this stuff. And so now you look at the daily chart, right? So we gap down again. And it's got some work to do, right? So if it got some levels right here, 338 is going to be a level, 200-day moving average is going to be a level. So just kind of see how those levels hold going into this week. Boeing, I love Boeing. Conceptually here, right? Here's the big channel that we've been tracking, right? So you can see I've got a big alert on this one. I'm ready, it's like I'm ready for this thing to try to get a little bit of a rally here back to the top of the channel. I was thinking maybe it would get ready, maybe get ready this week, but it just had some more news coming out saying that they might have to do, the FAA said they might have to do a check on all the electrical systems or replacement of certain components of the electrical systems, all the 737 MAX airplanes, and so that's not good. So again, here's your downward trend line here from the channel. So even if we gap down tomorrow, we're just going to have to continue to keep an eye on this one. Now it's going to be trickier here, right? So once we get above that, right, we want it to confirm, right, and then you got that channel resistance, and then it can work its way back down again. So we need to get back above that channel somehow and above that trend line. So I was hoping it would do it this week, but we'll continue to observe and monitor it and see if it gives us any setups. And then LK's been wild, right? It's been, how on earth it's been holding up, in in this Corona event is unbelievable, right? I mean, it did get its initial move down, but it's like, folks, this is like a coffee store in China. It's like, no one's going to this thing, but like they're still trading this thing and holding it up. So we'll see how it does. But again, key levels right here for this thing is getting above these prior tweezer tops right here, right around like 43, 44. So if we can get above that, with some volume, right, we may be able to test that scene of the breakdown here. Otherwise, maybe this thing will finally start to work its way down. They bought the dip really heavy on this one right here, and it did drift its way back up. Now it's getting a lot of sideways action. So we're in the congestion zone right now. So, but it's holding up. That's something interesting for it. So, Ernesto, what's going on? Yeah, good evening. Yeah, let's take a look at LMT. Whew. So LMT did a pretty good job right here. It reclaimed, it was a good buy the dip on Friday, but look at that, still rejected by the 200-day moving average. Right, came back up, back over the 200, back below it again, tested again. Watch for a potential move down, right? Possible head, like kind of mini head and shoulders going on there. But again, here's your trend line, here's your low, here's your trend line right here, right? So we need to get above that to really kind of get super bullish, but it's given some pretty good action intraday. Good, Tracy. Good evening. Good to see you. INO. I know. Yeah, so INO has been pretty wild. I know we talked about it the other day. This candle right here is a great breakout candle over these levels. Huge volume, and then see ya, right? So let's see if this one, it's another good Corona play. Let's see if we get some follow through tomorrow. Possible good chances to buy the dip on this one. It's a fun one to look at, and I think some folks are trading it too in our group. I believe it does have options. So let's take a look here. So AMD. Another interesting one too. So it's holding up pretty well. It's holding its cloud, right? So it's kind of stayed within the double inside day range the other day. Again, let's see if we can get over these guys, get over those. Get over the 50-day moving average is about $50. Right? If we can get above that and close bullishly, right, it has a chance of breaking up into the gap. If not, right, you can see the levels down below here. 41 is going to be a key level for it to hold, right? So this was a prior resistance level right there, which is kind of support. So a couple stuff there that could be good for AMD. And then NVIDIA. NVIDIA's trying, again, like I said, Shop had good relative strength this day, so did NVIDIA. Got some decent follow to the upside. Other than that, it's also chopping around like AMD there. So it's holding its 50-day moving average. It's got a cloud burr right here at 245. That's going to be a key level for it to try to hold too. And then AYX, yeah. So AYX, again, has a lot of potential here. You had a big, decent close this day over some key levels. They gapped it down the rest of the market. Hit the 50-day moving average, bounced off of it. So see if we can consolidate here and try to work its way up. And Tracy, if I always say thank you, oh hey, my pleasure. Yeah, and that's awesome. I really appreciate it. And there's always tons to learn, right? The market always gives us something new each day. But again, it's all about consistency. It's all about finding the stuff, what you're comfortable trading, and finding the patterns that are consistent, right, and work for you. So, so we like we like all sorts of good stuff. We look at the market in a little bit of a different way. But I'm glad you're learning, and that really that makes me happy. So good stuff there. So good. Wow, great chart requests tonight, everybody. So this will be a fun week. We're going to continue to look at bearish continuation patterns, and we'll explore their probabilities, and hopefully you guys will be able to spot them when you see them in the future, and maybe it will help your trading going forward. And really appreciate everybody tuning in, and thank you everybody for your support. On YouTube, if you guys are new here, definitely click subscribe. We always appreciate that. And also hit the like button. We like that as well. So good stuff. Well, I hope everybody has a wonderful evening. Get some rest, and we'll have an awesome trading day tomorrow. So really appreciate everybody, and have a wonderful evening. And remember your risk first, and stay safe so you can stay in the game. And I'll talk to you guys soon.